Carter, before we get into that, just reaction, please, to the trading today. It's pretty ugly out there.
It sure is, and I think it's a testament to the things that lead and drive the market higher when they unwind are the things that take it apart. We're seeing that tech is the winner on the way up, and it's so inflated, loved, overowned, if you will. It's now the thing that's taking it down.
The point decline in the NASDAQ right now is higher than the point decline in the Dow, which is remarkable because the Dow is almost triple the size in point terms. All right, let's get through some of your charts. As we've talked about how bad tech is, you actually think a name like Broadcom could be poised for a breakout here?
Well, let's see. Not so much a breakout, but favoring it because of how well it acts. So if you were to really step back and think of all of the various approaches to investing, one of the most robust factors in some of the biggest quant models is relative strength and momentum. And so what we know is the tech sector has broken down. But if you look at Avago, for instance, Broadcom, it is down much less than the market and is still holding trend. You could see it there on the chart. Versus the tech sector, the NASDAQ, and other areas which have clearly broken trend. And so that kind of data and that kind of day-to-day action is impressive. It means that it's garnering less selling than other names.
HPQ is another one that you say is not just holding in there, it's up 15% over the past 6 months.
Well, that's right. So, and both of these stocks are up versus, of course, the NASDAQ down 20 and 30, depending on whether the NASDAQ 100 or you want to look at the tech sector. But the point is that they're holding trend and they are exhibiting those characteristics, relative strength and momentum. And let me just say that the only way a stock can go down, to be clear, right, is someone has to sell it. So if no one sells any given day, it cannot go down. Meaning this is not attracting the fear, the selling pressure, the margin calls, whatever it might be that other stocks are attracting. And so that's a very positive data point. Here and now.
We're happy to hear them because the flip side of the picture, I mentioned it a moment ago, Tesla trading below $800 a share, and you think there could be more downside?
Well, that's right. So one, we know that Tesla is breaking trend, which is the case with so many others, but it's just starting. Whereas the sector itself and many names have broken weeks and weeks ago. At one, Tesla is down just as much as the market and more. And yet it's only just now breaking strength. The point being it was such a high flyer. And then there's this. It's a darling. Widely owned, widely believed in, highly priced, if you will, however you want to get into the valuation metrics. And not many people have really abandoned it yet.